What's up, guys? Welcome back to my channel, Business Talk with Billy Bands. Today we're going to be discussing support and resistance levels. What are they? How do we trade them? And how do we draw them? And how can we identify them, right? So before I show you all this good chart action, we're going to jump into Microsoft Word really quick, and I'm going to give you a breakdown. So support and resistance levels refer to price levels on charts that tend to act as barriers, preventing the price of a stock or other securities from getting pushed in a certain direction. Support occurs when a downtrend is expected to pause due to high demand, where buyers tend to step in and drive the price up. Resistance occurs when an uptrend is expected to pause temporarily due to less supply, where the sellers step in and drive the price down. I'm going to give you guys examples of this. Support and resistance areas can be identified on charts using trend lines, moving averages, and Fibonacci retracements. A support or resistance level is only valid if touched 3 times or more. The longer the time frame, the more valid support and resistance becomes. Once an area or level of support, of resistance, has been identified, those price levels can be used as potential entry or exit points to go long or short, because as price reaches a point of support or resistance, it will do one of two things: bounce back away from the support or resistance level, or break the price level and continue in its direction until it hits the next support or resistance level, depending if it's in an uptrend or a downtrend. In other words, you can think of resistance as a ceiling where prices tend to not break or go above. Support can be looked at as a floor where prices tend to bounce off of or break below. Indicators that also act as support and resistance levels are moving averages, trend lines, channels, and Fibonacci retracement. I'll give you guys examples of this in the chart. So these are some rules. Never buy or go long at a resistance level trying to anticipate an upside breakout. Never sell or go short at a support level trying to anticipate a downside breakout. Always trade in the direction of the trend. Remember, the trend is your friend. Once support is broken, it normally becomes resistance, and once resistance is broken, it normally becomes support. So with that being said, let's jump right into some chart action, right? So we're going to be discussing companies NIO, AMD, Disney, Roku, QQQ, NKLA, and Macy's. So let's jump right in. So we look, NIO has been on a consistent uptrend for the past about 4, 5, 6 months, right? So with that being said, we see a support level here, price bounces, pushes up, returns back to support, where it could have been a good buy zone, where you could have bought, rode price all the way up to resistance, then boom, you sell, let price come all the way back down. Now, it doesn't fully return to support, but what does it do? It stops, pushes back up, pulls back down to support, and now what I like to call this line here is my median support or median resistance. Not a lot of people use it, but I like to use it because when there's a wide range of price, this kind of divides it up for me into a smaller range. So now you see how price is trading in a smaller range here and here and here. So it very rarely breaks above into this range. So it hits resistance, pulls back down. Resistance, hits support, pulls back up, hits resistance, resistance. So you see all these areas are good depending on what side of the market that you're trading on. If you're not an experienced trader, I wouldn't try to counter trend and go against the trend. As I said before, the trend is your friend. Trade in the direction of it. But what you could do is you could have went short here and rode all the way down, and then boom, bought back your shares, made your money, waited for the next opportunity. Then up here, you could have sold short, rode it down. Sold short, rode it down. At support over here, you could have bought, rode price up. At my median resistance, you could have, let's zoom in a little bit, sold short here, rode price down, right? So with that being said, this is called a channel, right? These two white lines are called a channel. If there is one line here, this is just a trend line. This is just following the trend up. This is a trend line. If price was going down, such as, let's look at NKLA really quick, down, this is a downtrend line, right? It connects 1, 2, 3, 4, 5. This is a downtrend right here. Even though it breaks, some news probably came out that made it boom, spike all the way up, and then immediately spike all the way down, right? It's a V spike. So with that being said, let's go back to our initial example over here on NIO. Okay, so now that we see this is just a trend line. So this is one way to identify trend. But let's say price is, creating highs, creating highs, creating highs. We want to contain price. So what we're going to do is let's just remove this, right? Instead of drawing two trend lines, we can draw the channel. So we grab the channel, and now, boom, we draw the channel line up, and then boom, just pull here. Boom. Now we just created our channel. See that? And now we change it to whatever color. Go. Boom. We got our channel, right? So channel is one way to see where support is and resistance is, right? And the trend line is just one line. So now with that being said, let's move over to AMD. Let's go back at 180. Okay, perfect. So now we see price is trading in a range over here. See, it's on a support, pulls up, hits resistance, comes back down, breaks support, hits a new support, right? And now this old support becomes resistance. Bounces off of it, comes back down, right? We could draw another line here to act as support, but I didn't feel the need to because I wasn't trading during this zone, and especially where price is at right now. These levels are irrelevant to me when I'm trading intraday or whatever, because price is not going to drop below 74 very, very fast, right? And if price does come here and then breaks here, now I'm going to start redrawing out these levels to see where price is more likely to head to, right? So with that being said, we see, look here, support, rallies up, hits resistance, bounces back down, pulls up, support, rallies back down. Hits resistance, rallies back down to support. See how it's just trading in a range, trading in a range. This would be good for swing trading, right? Hit support, you go long, boom, sell at resistance. Now over here, we had an upside breakout, right? Upside breakout, boom, rallied up, hit a new support, held it, rallied up, broke resistance here, pulled back down. Now, I created this support here because this is where price is more likely, is mostly contained, right? See, boom, hits here, hits support, hits resistance, breaks out of resistance. The buyers went crazy that day. Boom. Now, there's no supply here. Well, not no supply. There's very little supply here. Nobody wants it here, right? It's too high. Sellers, boom. Can't stepped in, sold it. Then, what happened? Let's zoom in. Look at this. Congestion right here at support level. Support, 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 support. Could have bought all here. Rallied back up. Broke down. Hit support, support, support. You see that? Now, boom, we rallied back up. Look, support level. Hit resistance, pop back down. So you see history tends to repeat itself, right? So now, you don't really, on this chart, you can't really draw any channels because there's no channels to be drawn, right? So yeah, let's look at Disney now. Okay, so let's go back to the 180 day. So Disney, trading in that channel, right? It's trading in a channel. If there was only one line, it'd be a trend line, right? Trading in a channel, once coronavirus hit, boom, plummeted. Now, hit resistance, pulled back down to my median support and my median resistance. This would be my median resistance. This is my median support, right? Because it's holding as a floor. Here it's holding as a ceiling. See that? But okay, so look, hitting resistance, 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 again and again and again. And it always pulls back to the support or breaks the support and hits the major support, right? See, support, support. Yes, it was a small break, but it pulled right back to support in a couple days. Boom, hit my median resistance, pulled back down. Median resistance, pulled back down. Now, where we're currently at, we're trading in a little range, right? So that's why I have my support here, my median support, and my resistance. So that's how I would go about trading this. Now, let me show you how I would use moving averages to also act as support and resistance. So I get my moving average here. Let me change this to, I personally like to use the 50-day and the 100-day as pullback support. So now we're going to get another one on. 100-day. I'm going to change the 100-day to yellow. Okay. So now, let's look on inch day. Let's look 5-day, 15-minute. See how price stays above. Actually, this is actually a bad example here. Let me go back to the 90-day. Okay, so the moving average also acts as a support and a resistance. You see here, it's resistance, bounces back down, hits our major support, pulls back up, right? Holds resistance, resistance, now holds support, pulls up, pulls back down, holds a support, pulls up, holds a support, holds a support, holds a support. See how it holds as support the whole way until it breaks down and it hits my major support again? Hope I'm explaining this good for you guys. So again, over here, you see how it's holding support, 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 support. So you can also use moving averages to coincide with your support and resistance levels, in a sense, right? So if we look at, let's say, Roku, right there. Yep, it's our next one. Roku. Again, look, it's acting as a resistance, 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 both of them. Look, resistance, resistance, till boom. Turns up, acts as a support, pushes off of that, pushes up, comes back down. Look at that. Support, breaks down, uses this as the next support. This is support. This is support. Even though it breaks through, that's okay because it's returning to our major support, right? Look at that. Major support acts as a support, 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 support. Look at that. So we could use moving averages to coincide with our support and resistance levels, especially if we're intraday trading, right? So look at this. This is on a 5-minute chart. When price opened up, if price is above the moving average, that's good. That means that it's very bullish. If price is below it, that means it's bearish. So as price moves up, look, pulls back down to our support level, could have picked up here, rode it here, sold out. Pulled back down, hit our moving average support and our key level of support, pushes up, pulls back, holds our level of support, pushes back up, right? Same thing. Holds as support, pushes up. Price pulls back. Look, touches it as support, breaks through that, but holds this as support instead. Support. See that? Look at that. It's holding very nicely. It's holding the 100-day as support and the 50-day as support on the way up as well, right? So moving averages are very good to use to coincide with support and resistance, along with channel lines and trend lines. So let's remove this really quick because I just showed you how we could use that. And I'm going to get into more videos later on what really are moving averages, how do we use them, when do we use them. But moving averages for this video, the main purpose is it coincides with support and resistance, right? So QQQ is one of my favorites. This is actually going to be, I'm going to go over QQQ and Nikola next, right? So QQQ, let's look back. QQQ has a very strong uptrend, right? So as you can see, it's hitting resistance, 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 pulls back, hits support a couple times, as I've been saying repetitively over and over. Now, if we zoom in, look, it's hitting that resistance, resistance. Now the resistance became support, 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 all the way up until it hit the key resistance, pulled all the way back down, broke that major support line, which was no good, right? Excuse me. Right. So now we're trading in a little bit of an up and down range, right? So let's look at 30-day, 4 hours. It's acting as resistance, resistance, and resistance. Also, support, 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 and support, support, and support. And also down here, support and support. So with that being said, we could have used this as a buy area, a buy area, a buy area, and a buy area. This could have been a sell zone, sell short, right? And so on and so forth. So now that you identify that, let's look at Nikola. Nikola is in a downtrend, I believe. Yep. So look at this. It's creating a higher high. Now it's higher high. Now it's a lower high, lower, lower, little higher, but that must have been some news that popped it up. Now it's, look, hitting resistance, 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 all the way down, hitting resistance, and even currently, let's look here really quick. Bounced off resistance. Look at that, perfectly bounced off of resistance. Now it's trading back lower. So we could expect this, not 100%, but most likely to return to the support level where we could then pick up for a long position, right? So now let's take a look at Macy's. Go Go back. There we go. Okay, great. Now we see Macy's fell off from the virus. The market crash happened. Now, boom. Now we're trading in a range again. If I didn't have this here, let's remove that. Look, now we're just trading in just a big range from $4 to around $8, right? So like, it's like really hard to gauge like where are we gonna pick up, right? We have to wait for price to get all the way up top just to go long or to go short. So what do? Well, what I like to do is create that median range of support and resistance, which I like to put right in the middle where price keeps touching. So look, hit support. Now we hit resistance. Support, resistance, support, resistance, support, 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 resistance. Again, break support a little bit, breaks out of the resistance. Some news probably came out. Boom, pops back down to support. See the same process. It keeps being repetitive over and over and over and over and over again, right? Look at this. And even if you wanted to draw another level, but I suggest to keep your charts nice and clean, you could draw another level right here. See that? Support, 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 support. So now if we go to intraday, this line, it broke out of that support that I just drew. Now it's hitting this level of support. Bouncing up, bouncing up, bouncing down, hitting support, hitting support. Could have bought here, went long, sold up top, right? So basically, that's the overview of how support and resistance works, right? There's a lot more that goes into it with, wow, when do you buy, when do you sell? But this video is basically just identifying key support and resistance levels, right? So this doesn't mean that you're definitely going to buy at that support level or definitely sell at that support level. There's a lot more research that goes into it. You have to check level 2. You have to see your volume confirms it. Do your moving averages confirm it? Does your MACD confirm it? Does your volume average confirm it? There's so many little different things that have to confirm it with one another to make sure that the odds are in your favor so you have a statistical edge over the market, right? So I really hope you guys enjoyed this video. Please like, subscribe, comment, and leave down below some more videos that you guys would like to see. Thank you, everybody. Have a blessed day and a successful trading week. Take care, and let's get this money.